Hello, everybody. Thomas here. Looking forward to talking about NVIDIA, NVDA. This is a stock that has been getting a lot of attention throughout the past year in the stock market by virtue of its leading position in the semiconductor and chip space, primarily related to its dominance of AI and the increasing focus on artificial intelligence driven solutions throughout the marketplace and the economy. That's led to a significant increase in the stock that at this point should have a lot of people wondering how much opportunity is left, or whether or not maybe the stock could be due for a pullback, or maybe is a little bit overvalued. So let's go ahead and dive in, and I'll show you what my analysis based on the Rebel income system is showing me. This is a current chart for NVIDIA as of the close of the market today on August 22nd, 2023. We can certainly see that the stock has been following a very clear upward trend throughout the course of the year, as it has increased from its starting point in roughly September of last year, down at around $100 per share, a little bit above that, and has risen as of today's close. It hit a top right at around its 52-week high at around 475, right up in this area before coming back a little bit. That's an impressive upward trend, and if you're somebody who was in NVIDIA at the beginning of this trend, even the beginning of the year in this area when the stock was around $150, then you really had an excellent opportunity to enjoy a very, very nice and very aggressive upward trend. The natural tendency, however, for most investors is to see a stock at these historical highs and seeing it as it starts to come down off of those highs, and then maybe even when it starts to bounce a little bit, as seeing that as an opportunity to buy the dip and try to ride the next wave back up. Just to revisit the kinds of patterns that I like to try to focus on with the Rebel income system, let me clear out my chart here a little bit. I focus on two primary technical indicators along with my price patterns. The first one is the 200 period moving average. I am looking at weekly charts here, so this is a 200 week average that has been going down but is starting to show a little bit of flattening, and if it's going up a little bit as I'm showing here, then that's okay too. So that's the 200 period moving average. The 20 period moving average, on the other hand, which will see quite a bit of additional movement, under the best circumstances should have started to approach the 200 period moving average, also started to flatten, and also under ideal circumstances started to tick up a little bit. The stock's price action at that point will start to show some signs of stabilization, and we'll look for some kind of a hammer pattern that will provide an entry point. A really good example of this bullish level 1 kind of a pattern, this is the first pattern that I really like to try to look for, occurred right here at the beginning of the year for NVIDIA. We can see the 200-day moving average sloping up exactly the way that I'm talking about, and the 20 period moving average flattening, and then it actually started to go up here at the beginning of the month. Looking at the candlesticks during this period as the stock was dropping back down towards the 200 period moving average, there are a couple of really interesting candles that occurred, and they were right here. This is a 2-week period of time where we see 2 consecutive hammers, and we really only need one to look for an opportunity to place a trade and get into the stock. A lot of people will try to look for a little bit more confirmation, make the trade a little bit more conservative by looking for an additional candle after the hammer, kind of called an engulfing or an igniting candle, like the one that I've circled, that indicates that bullish momentum is actually starting. But for the purposes of what I like to do with Rebel income and my put selling trades, a lot of times I like to work with the points in time where these hammers appear, because these become pretty high probability reversal signals of this shorter term bearish momentum that will give the stock an opportunity to stabilize before it starts to go back up again. So that's the bullish level 1 one pattern that I'm trying to look for, and this is a really, really good example at the beginning of the year. Now, the problem when you see stocks really start to accelerate and move up is that the further they go up, the higher the likelihood is that those trends are going to reverse. That's because these trends become less and less sustainable over time. And that's what we saw here for about a month in NVIDIA until the beginning of this week. It is bouncing at the moment, but this retracement is pretty normal under most circumstances. What I like to do in my analysis, and I'm going to change the color on my arrow here, what I like to do in my analysis when I see these is to try to identify where I think the next level of support is going to be. How far could the stock drop before it should find a new stabilization point? If it's going to maintain an upward trend, it should find a point not too far from where the last high occurred. A lot of technicians like to focus on a 20-period moving average, which right now is right around $384, so right in this area, which should ideally act, if the stock were to reverse and come back down again, should act as a first level of support. So I'll just write that here, support 1. I've also drawn a trend line using Fibonacci analysis on my chart with two specific retracement levels. The first is the 38.2 retracement level, which has historically proven to be a pretty reliable level of support in upward trends as they retrace back against their current trend. Another one is the 50% retracement line. This one isn't technically a Fibonacci number, but time has proven that when a stock really increases in strength in its trend, as NVIDIA has, it will very often retrace about 50% of that trend. So that means that if this $384 level doesn't hold for whatever reason, the next likely support is going to be right around here, around $340. So I'll just write here, support number 2. If that one doesn't hold, then the next level of support after that should be about $295. So I'm going to put support 3. So what this means is that in this stock right now, if you're looking for an entry point and you're trying to think about risk versus reward, the stock as of today's close is around $456, a little bit above that point. As recently as the end of last week, it was just a little bit above $40. So you've probably got about $50 of downside against what looks to be very clear resistance at the very top of this range, maybe around $480. Well, that's about $24 away from the stock's current price right now. So from this point to this high is about $24. So you've got about $24 of upside right now against easily about $50 of downside, just down to where the last pivot low occurred, the last time it stopped dropping and reversed back higher. You've got additional downside down here to about $384. So that's about another total of $75 roughly. And my math may not be exactly right here, but I'm just shooting at generalized figures here. About $75 of potential downside if it drops below this pivot low point down to the level where the 20-period moving average is. If the stock does decide to test some of these Fibonacci retracement levels, there's even more downside from the stock's current price, down to 340 from the stock's current price around 456. There's about $116 of downside. And down to, if it does retrace about 50%, as often happens, then we're probably talking about down to about $295 from 456 is about, again, I'm just going at generalized numbers. These may be not very precise, but roughly around $160 of downside. So if you're trying to look for a technical opportunity here, it doesn't look very good. There's only about $24 of upside against at least $50 of downside. So you're looking at an overall reward to risk ratio. This is an important figure to keep in mind when you're trying to think about how good is the opportunity I'm thinking about. Reward to risk on this is about 0.5 to 1. In other words, you've got a little over twice as much risk in this stock right now if you were to buy in and trying to look for an opportunity than you do downside. So that makes this look like a not great buying opportunity right now from a technical standpoint. Well, what about from a valuation standpoint? I like to pay a lot of attention, as you may know now, to fundamental and value analysis to identify what price I think the stock should be at. And when I'm looking at a stock like NVIDIA at these serious highs, I really want to know how far away from the stock's, what I like to think of as a fair value price is the stock right now. Is it close to it? Is it possibly below it? Even in an upward trend, if companies' fundamentals are strong enough, if the valuation metrics work out correctly, it isn't always a given that a stock has outpaced its value proposition. And so I want to try to make sure that I'm taking a serious look at that in every single case. So let's go ahead and take a look here. The basic metrics that I am trying to pay attention to, just to refresh your memory on these, is to look primarily first at free cash flow and translate that into what I like to call a free cash flow yield number. I like to pay attention to cash against long-term debt and compare net income to its a company's net income to its overall revenue, as well as paying attention to whether or not a stock pays a dividend. It's not necessarily so much how high the dividend may be as it is whether or not a dividend is being paid. My valuation metrics I also try to keep pretty straightforward. I focus on price to book and price to cash flow analysis. And in both cases, instead of simply saying that I am looking for a certain number or a certain ratio, I want to compare a stock's current ratios against their historical norms. I really want to compare these valuation metrics against what the market has historically proven to consider as normal valuation levels. If I see that it is that these current metrics are significantly above those historical norms, then that is a strong indication a stock is overvalued. If, however, the valuation metrics are below their historical norms, then there's a stronger indication that the stock could still be undervalued and may offer an interesting opportunity. So let's go ahead and take a look at those numbers really quickly. Okay, so here are the metrics that I like to focus on. Let's talk about free cash flow first. We can see that as of the last quarter, the company declared a little over $5.1 billion in overall free cash flow. Now, that is a number that has decreased compared to the last 12 months. So I'm going to go ahead and just draw a down arrow here. But compared to the previous quarter, has increased significantly from about 3.8 billion. So that is a general positive. And the free cash flow yield here is just simply dividing current free cash flow number against the stock's actual market cap. In this case, that's a very modest number of 0.44%. But the more interesting piece of the free cash flow puzzle is this increase over the last quarter and the relative strength over the last 3 quarters. In terms of the company's liquidity and overall cash, the balance sheet shows that NVIDIA is in a very, very strong position. We have 15.3 billion in cash against about 9.7 billion in long-term debt. Notice that long-term debt over the last year has been very, very stable. It is only about $4 million higher than where it started a year ago. In the meantime, the company's liquidity has followed a similar pattern as its free cash flow. While it is down compared to where it was a year ago at about 17 billion, it has increased in each of the last 3 quarters to its current level at about 15.3 billion. This is a net positive evaluation overall, especially considering the pattern over the last 9 months. I really pay a lot of attention to companies' overall operating profitability by using net income compared to revenue, simply dividing net income by its revenue over both a trailing 12-month period and in the last quarter. In the case of NVIDIA, we can see that that number for the last year is about 18.52% compared to the last quarter, which is about 28.41%. Compared to the trailing 12-month period, then the quarter is up. It is increasing in its overall profitability. That is something that is confirmed by the fact that free cash flow and cash are all also increasing. So these are all net positives in terms of its overall fundamental profile. NVIDIA is a stock that pays a dividend relative to its current price. Of course, a 44-cent dividend is very, very conservative, not even yielding 1%. In fact, it's 0.1% in terms of yield. But the more interesting and more important element for my fundamental analysis is the fact that it does pay a dividend at all. A lot of stocks in the tech sector don't pay a dividend at all. And so finding companies like NVIDIA, Microsoft, and some of the other big boys in the industry that do is a net positive. Despite all of these strengths, however, my valuation analysis using price to book ratios, price to cash flow compared to historical levels does demonstrate that the stock's fair value target price is at only about $152 right now, compared to its current price, well above $450. And so that means that if you were to look for an opportunity to buy this stock, if you did that right now, you could possibly be looking at an additional downside of about 67% before the stock would reach any kind of level that traditional valuation analysis would suggest is a fair value. Compared to where I would want to look for the stock as a compelling value-based opportunity, the stock would have to drop to around $122 per share in order for me to really want to consider NVIDIA a compelling value. Now, it hasn't been in that range for a very, very long time. In fact, since before the beginning of 2023. Let's go back to our chart really quickly, and I'll show you what I mean. Okay, here's NVIDIA. This is this again looking at the chart as of today's close. And with all of this in mind, remember I said that I would want to look for a really compelling opportunity to buy the stock would have to be all the way down here at around $125. Well, the last time it was down in this range was at the very bottom of its last downward trend that went all the way through 2022. It bottomed in September, October of last year at around this level before it began its current trend. So this would mean that the stock would have to retrace not 22% of its trend from its current price down to the 38.2 retracement line, not 50% of this trend, or about 33% of its current price down to $295, but it would have to retrace all of this current trend at a total of about 66% drop from its current price to get down to $125 for me to consider it to be a compelling value-based opportunity. All told, that means that NVIDIA is a sucker's bet right now. Thanks, everybody. Hope this has been useful. I appreciate your time and look forward to seeing you again soon.